Hey guys, how's it going? I'm gonna give it a few more minutes. I'm just gonna post this up on the Facebook, and then once I get this going, we can get started with the weekly chart analysis. Let me just get this on the Facebook real quick. All right, cool. Looks like we're good to go, guys. So if you guys have any questions, feel free to put them in the chat. I know this is on YouTube right now. It's not on Zoom or normal meeting area since it's not a normal webinar. But for the most part, some people are asking that I can go over, each of our pairs that we have here listed, and to basically mark up the K2SR zones, which are the rejection points. That way, everyone who's trading will understand, where the areas of rejection are. So you can see right here, clearly, you can see price is pushing up and then market opens in about 30 minutes. So as it does, it'll probably, reject off or continue upwards. It just gives you guys good market structure as to, where you should trade and where you shouldn't. Hey, Fatif, how's it going? Kyle, see Kyle's here too. Nice, thanks for checking in, guys. So what I'm gonna do is, I already have these marked up here, but what I'm gonna do is I'm gonna start from scratch so that you guys can see exactly how I mark up these specific zones, because obviously you can see here that price respects these zones very well. So you can see price, it breaks the zone, consolidates, breaks it, and then it pretty much just bounces from zone to zone. So if you guys know where these zones are, you guys will know exactly where not to trade and where to trade. So this will give you an upper hand as to, how you should be trading and how you should be managing your risk depending on where price is with regard to the next rejection points. So pretty much right here, I'm just going to clear this up. And then the first thing I do is I will turn on the K2SR indicator. And you can see right there that all the zones are pretty much plotted for me already. So once I have that, I'm going to open up the rectangle tool, and then I'm going to draw my own zones over these K2SR levels. It's as easy as that. There's literally no guesswork here. Like literally the algorithm does all the charting for you, and you just copy over them. So if you do this, you know exactly where not to trade and where to trade. And if the zones are too close to each other, like you can see right here that this zone actually ends right here, but you can see this one extends out a little farther. What you can do here is you can just include that into that zone. So right here, same situation. And there it goes. So once you take off the K2SR indicator, you've got your zones plotted for you, and it's as easy as that. So for odd CAD right here, you can see that the closest upper zone is going to be at 0.9627, and the lower zone is going to be here at 0.9561. So, obviously these are going to be the rejection points. So if you guys want to trade, make sure not to trade within these zones, because, last thing you want to do is if you enter a buy and you're writing this up, you probably want to exit before you reach the zone, because you can see that there's a high right here, or, there's a rejection point where it might qualify for a double top. So if that happens right there, you definitely don't want to enter any buys once it gets close to this area. Same situation with the sell down here. If you're taking a sell, you probably want to get out of this trade before it reaches this point right here, because like I mentioned up here, this could be considered double top. This can be considered double bottom. So as price reaches down here, it can reject right off it. So, your main goal here is to identify risky trades, because if you want to be a consistently profitable trader, you have to know where not to trade, because a lot of people want to keep entering so many trades and overtrade, and they end up blowing accounts because, they're just not trading with proper risk. They just want to take as many trades as possible. And that's not the way to survive in trading long term. That's why you see there's a lot of turnover in the trading game. Like I've been trading for so long, and you guys have seen that I never stop. I trade every single day. You see people trade a couple days and then they blow their accounts and they stop trading. The difference with me is that I've been doing this for so long that I understand proper risk management. So if you guys trade with proper risk management, you guys understand, not to take these super risky trades, you guys can last in this game long term. So, enough said. There's odd CAD. We'll move on to the next pair. Next pair over here is odd CHF. And it looks like this was a trade we had last week. It hit full TP right there for 20 pips. So I'm just going to delete this alert right here. And then I'm going to do the same exact thing I did with odd CAD. So I'm going to delete all my zones, turn on the K²SR indicator, and pretty much draw my zones from scratch. So we'll start from top to bottom. You got this upper zone right here. We've got this middle zone right here. You can see there's a bunch of zones within, so I'm just gonna make one big zone. And then same situation down here. There's a zone up here, but there's also zones down here. So I'm just gonna create one big zone right here. And there you go. Let's go and turn off the K²SRs. And you've got perfectly lined up zones right there. So you know exactly where to trade and where not to trade. So for odd CHF, the nearest upper zone is going to be at 0.6678, or we'll just round that up to 6679. And then the closest lower zone right here is 0.6602, or we'll round that up to 6603, just so that you guys can have some cushion right there. In case you're taking a sell, price might reject up. Same situation if you're taking a buy, probably want to ride this up. Exit before you reach the zone, because price can reject right off, and you could go lose some profit right there. So there goes odd CHF over there. Kyle said, so you trade between the two white areas when you have zones. Yeah, Kyle. So basically, this is how I normally trade. I like to trade. This is a zone strategy. So basically, right here, if you get a buy, I'll ride that buy to the next zone. So this works out perfectly right here. So this is like a spot on example right here. So right here, you get a sell signal, right? You could take this sell signal and ride it down to the next zone right here, right? You want to get out, slightly before the zone, because you don't want to get caught in any retracement. So right here, here's a clear example. There you go. TP right there, right? Same situation right here. You get a buy signal. Generally price goes from zone to zone. I can go back as far in data as you guys want, and I can show you guys that this usually works pretty well. So if you tie the zones with momentum, you pretty much just ride the the trades till they reach their full momentum. You're pretty much on a good path, because you're basically just riding the wave. You're not taking too much risk. You're not calling like tops and bottoms. You're just literally just riding the wave right there. Another win. And then another sell right here. And it's not complicated at all. If you have the K2 indicators, literally the indicators do all the work for you. And a lot of people don't like using indicators, but a lot of people don't realize that, these indicators are basically what you're looking at the chart. It's just making it easy for you, because it identifies what you're already looking for. So same situation right here, right? Sell signal, you think it's going to ride down to the next zone. And what happens right there? Another TP. It's like clockwork. It's like, well, you don't even have to think about it. Same situation again right here. Another buy. I ride it up to there. And then right there, you can see that it's still active. So this is the K²SR zone trading strategy. This works very well in the 4-hour. But just going back, you can see everything right here. You have a buy signal, it goes to the next zone. You have a sell signal, it goes to the next zone. Literally, price, it just repeats itself. It goes from zone to zone. A lot of people like to overcomplicate trading, trading price action strategies and stuff like that. Like, people try to analyze these candles. These candles don't really, it gives you a small story, but that's just one aspect of it. You have to tie in different things. Like for me, I trade momentum, but on top of that, I like to understand where the structures are. So I basically ride momentum to the next structure, and then same thing to the next structure, same thing to the next structure. I'm not over here calling tops and bottoms. Like, I'm not like, okay, it's a double top, and I take that trade. I try to keep it as simple as possible and as profitable as possible. Like, this isn't a seasonal strategy. This is a strategy that works all year round. You can literally just, if you draw zones over here, you can see that it works perfectly. Like right here in June, 2 months ago, Same strategy. You just pretty much write it from zone to zone. The key is to use proper risk management and to use a profitable strategy. That's all you really need. Let's see, James said, how do you make the zone stretch across the whole chart like that? So James, this is a new feature that they just released last week. So you just click on your rectangle box and then enable these two right here. So extend to the right, extend to the left. It's pretty cool because it makes it a lot easier. Before we had to draw it all the way across, but now it does it for you. So it's really simple. Kyle said, is that how you were setting your TP and stop loss? Is structure and zone the same thing? Yeah, pretty much, Kyle. So what I mean by zone, this is like a rejection zone, the K2SR zone. So these are zones of rejection that also classifies as market structure, because if it's a rejection point, obviously that's a structure in market where price is likely to reject from in the future. And the way that I'm setting my TP, generally what I do is I still set the TP at the previous swing. So say right here, right? So at this point, this would be the previous swing down here, which would be about 55 pips. Or let me use a different example because this is kind of too close. So let me just go right here. Odd CHF, sell position right here. Put my stop loss at the previous swing, which would be right here, because as you can see, price swings up, swings down, then swings up right here. So this would be the closest swing, which would be, let's just round that to 43 pips. So this is normally how it would be placed, Kyle. But if the thing is, if you put your stop loss at this swing up here, which is about 67 pips, then you would just put your TP1 somewhere closer to that. So you can see right here that the full TP is way past the zone. This is like a danger zone right here, right? Because when price reaches this point, it's probably going to reject right off it. So this could be your full TP, but you could probably put your TP1 or TP2 or whatever, whatever you're applying above the zone, somewhere around here. Just so that once price reaches this area, you can eliminate your risk and move your stop loss to that point, so that if price was to reject upwards, you get stopped out in profit. And then, the trade would be risk-free from there. Or you can also attempt to, hit full TP and then let it run to the full TP. But, letting this run right here, you can see that it plays out exactly like, we anticipated. Rejection off the zone, rejection off this zone, rejection off this zone. It pretty much just repeats itself over and over again. Yeah, definitely, Kyle. I mean, this is like, you could take the bigger picture like this. You can draw up the zones on the 4 hour. And then if you want to trade on the lower time frames, this would be perfect because you already know where these zones are. So you can go like on the 1 hour and, you do the same thing here. And then if you want to like spice it up a little bit, you can, add the pivots, take your pivot entries right here for sells. So you could have taken this sell, you exit before you reach the zone. There's a ton of ways to apply it. And that's why we have, multiple strategies, but the basic framework and foundation of everything is, for the most part, to understand where rejection points are. Because if you understand where rejection points are, you know when to ignore the pair. Because obviously, if price is too close to a specific zone, you just ignore it. Just wait for a better entry. Because this is it's a marathon. It's not a race. That's what I always tell people. Because a lot of people want to make profits real quick, but the real thing with trading is patience. If you have patience, you can very easily be very successful at trading long term. Yeah, definitely. It'd be risky if you were to enter at, one of these points. But yeah, so going back, this is the closest upper zone for odd CHF, which is 0.6679. And the lower point is going to be 0.6603. But yeah, so that's it for odd CHF. We'll go on to the next pair. Next pair is odd JPY. Same thing here. I'm going to go and delete everything so you guys can see from scratch what I do. Zoom out of there, turn on the K2SRs, and then draw my zones. Like literally all you're doing here is you're just connecting the lines. It's not very difficult. And it doesn't take that long. You know, literally takes a few seconds. You just line everything up, and then you're pretty much good for the week, because these zones are probably going to stick there for the rest of the week. So, you know, at the beginning of the week, you just open every single pair, draw your zones on there, and you're good to go. And then you can keep checking it, like say every day before you enter a trade. That's what I usually do. So I'll have these zones lined up ready, but then before I take a trade, I'm just going to turn on the K2SRs, make sure I'm not missing any zones, and then I pretty much go on with my trade. So again, right here for JPY, you can see how powerful these structures are. So you can see these are like perfect rejection points. Same situation right here. Price comes down, rejects off this zone. And this is the best part about having multiple zones. You can see it as price breaks one zone, you're like, all right, there's another level right here. There's another level right here. So this gives you, you know, it's not just one spot where you're like, oh crap, if it breaks below, it's going to keep dropping. No, if it drops below, you have these other zones right here to catch. It's like a safety net. So price comes down, comes up, rejects off this point. It's probably going to come down from there. And it helps you with your, you know, understanding how price moves, especially on the 4-hour. So looking at AJPY right here, the closest top structure is going to be 77.34. It's going to round it up. And the lower structure is going to be 76.77. So those are the two structures right there. Pretty simple. Let's see, we got one question from Hotboy DJ says, so you would want to enter price when it's closer to the two middle zones? Yeah, for the most part. So we don't just trade like directly off the zones. What we do is we use the K2 momentum indicator too, because once price rejects off these zones, you can ride momentum to the next zone. Because like I mentioned, you know, price goes from zone to zone. So like right here, price rejected from this zone, came all the way up here, rejected off this zone, came all the way down here, rejected off this zone. It literally goes from zone to zone. It just bounces. So yeah, back to your question. So like right here, you can see price was in the middle of the zone. And like going back to Kyle's question earlier, so generally what I would do is I would enter a sell right there, put my stop loss at the previous swing, somewhere around here, 60 pips, right? So 60 pips. And then this is going to be like your first line of defense right here. So once price reaches this point, you're probably going to want to, you know, move your stop loss and profit because it might reject on you. So as price moves down, you can put your TP1 somewhere around here, just in case, you know, just in case. But the cool thing about this is if price closes within this zone, so say price breaks, so you can see right here, price into the zone, it's going to like move into that zone before it breaks above it. So even if you were to get into this trade, price comes down within the zone right here, things are like, you could still ride this to the full TP. You don't have to close out your position. You just move your stop loss to that point, just so you can protect your position. So right here, we'll let this run. You can see right there, rejected right off the zone. Perfect, right on point. But if you were to let it run, you can see it continues down. Like I mentioned right here, once it closes into the zone, it'll probably bounce within the zone until it breaks below it or corrects back up. It just gives you a ton of scenarios, you know, how the trade can play out. And if you want to spice it up, like I mentioned earlier, you could add the K2 pivots and you can see where price is trending. So if it's above the pivots, trending up. Above the pivots, or when it's like crossed up like this, consolidation. Above the pivots, trending up all the way over here. Right here, trend down a little bit, rejected off the points. There's a whole bunch of different things that you can do with the K2 indicators. Like it gives you so many options and so many different types of analysis to analyze your trade. Because obviously trade's not going to go the same way every single time. So it's good for you to understand where the rejection points are. But yeah, you know, reiterating your question, pretty much your best time to trade it would be within these zones, because you're able to spot where price is rejected from. Because like basically these zones right here are created by like bank algorithms, you know. So the banks, they have these areas where they won't let price pass it. So once price reaches this point, that's why you see all these rejection points on here. And this is on the 4-hour candle. So this isn't like a short time frame. This is a strong structure right here that's been created by like bank algorithms. So pretty much when price reaches this area, banks are like, nope, they push price back down. Same situation right here. There's like, you know, a stop area right there, and it shoots it right back up. So the thing is, you don't want to get in the way of the banks. Like, you can't control price. The banks are trading like, millions, billions of dollars to push price in a certain way. You just want to ride that wave. You want to get out of the way, and you just want to trade where they're not messing with money. So like right here in the middle, you take the sell position, you get out before you reach, the next algorithm point. Same over here. You take this buy right here. You don't want to get in their way. You just take this buy right here, you ride it up to the next zone. All right, cool, add a profit. Same situation like throughout. You can literally look at all these points over here, and you can see that it repeats it every single time. I mean, it's like hard to ignore, because look right here. You're in the middle. You see this buy signal. You take that buy up to the next zone. You pull out of your position, and you wait for the next one. You be patient. You just wait for the next entry. You don't have to take every single trade, but see, like, check this out right here. It's within that zone. TP. You could have gotten out 24 pips, Same situation over here again. I could literally just run through this and I could show you exactly, what we're looking for. Because you can see right here, this is a strong structure. You can see the banks are like, nope, we're not going to let price pass this point. So you don't get caught in their little traps. Because if you're trading in these areas, these are highly manipulated areas. So you try to avoid these points. You want to trade out in the open field where you can make your money and get out. You don't have to, hang on to it for very long. Because you never know when the banks are going to push price in the other direction. So right here, it's in the zone. I wouldn't have taken that. Right here, it's in the zone. I wouldn't take that either because it's probably going to reject off it. I'm trying to find another entry over here that we can probably look at. Let's move forward a little bit. Right here, sell signal within the zone. I'm not taking that because price is probably going to reject right off it. And look what happens. Rejected right off it. Same situation right here. Buy signal. I'm not going to take that because it's probably going to reject right off it like it did right there. It's all about trading smart, guys. Like, a lot of people like to overcomplicate trading. It's literally just staying out of the bank's way. You make your money out in the open, like right here. We got a sell signal, right? Take a sell signal. You probably get out right here at about, 20 pips. It would have hit TP right there, and you wouldn't got stopped down in profit. It's real simple. You literally just have to stay out of the way. Because you can see right here, when you're right here, this could be really risky because the thing is, you don't know if banks are going to let price pass it or if they're going to let it reject off it. Because literally once it gets to a specific zone, price could go either way. There's no guarantee it's going to go down. So to be safe, you're better off just trading out open field where, price is just trying to get to the next zone, because that's what price is doing. When it rejects off a point, it's just trying to get to the next zone. So from like right here to over here. And then, like I mentioned, once it gets to a zone, it's risky to trade here because price can either go this way or it can go that way. See, like if you're trying to apply the strategy that everyone applies, like a lot of people like to trade price action. They're like, all right, it's reached a high up here. It's going to come down. And then they reach this point right here. And people that just trade basic price action, they're like, all right, cool. It's reached this low right here, or, a double bottom or something, because there's a bottom right here, and they take a buy. What happens? They get stopped out. You can't trade like how everyone else is trading. Everyone tries to trade the same strategies, and it just doesn't work. Long term, it's not going to work. You got to trade differently. You can't trade like the sheep. And I don't know why everyone thinks price action is the best thing ever. It's not. It's a good tool, but you gotta pair that with something else. You can't just do what everybody else is doing, or you're not going to be, you're not going to last in this game long term. But okay, so there's ODJPY, and then we'll go over the next one. ODNZD, same thing here. I'm gonna delete all this stuff off the chart. Go back from scratch. K2SR right there. Line everything up. Man, it's like harder when the zone's kind of small. All right, cool. Cool. So we got that zone lined up. It's a little harder when you start trying to get zones on these super volatile pairs or the pairs that move very slow, because the problem is there's going to be a lot of zones that overlap. So generally, if I have a zone that's all on its own like this over here, let's see how many pips is this. I mean, I guess we could connect these zones right here. It's not a huge movement. All right, cool. So for odd NZD, I got this lined up right here. Take off the K2SRs. And then right here, we've got the zone. So the thing with odd NZD is that it's just way too close to both the upper zone and the lower zone. So we'd want to wait for this to break above or break below before we take any entries. So we could trade within this area or within this area over here. So the closest upper zone right here is going to be, let's see, 1.0930, and the lower zone down here, it's probably within this zone. So we'll count this upper zone and this lower zone. So you scratch that last number I sent out. The upper zone is going to be 1.0937, and the lower zone is going to be 1.0876. So that's going to be these two zones right here. You just want to wait for it to break above it to take a buy, or break below it to take a sell. And then, obviously you can apply whichever K2 strategy you guys like when determining your entry. So we're done with NZD. Move on to the next one. Odd USD. So this is an active trade that we still have open right now. I closed mine out in profit last week when you were up here, like really close to TP, full TP, because I don't like holding trades over the weekend. So I'm going to keep my thing lined up right there. But what I'm going to do here is I'm going to take off the zone so that you guys can see how the zones line up for odd USD. So we'll zoom out of this. And then we'll draw zones. So right here. And like I mentioned in the last one, if there's a zone that's all out on his own over here and he's too far from the next zone, so let's see how many pips. See, this is way too much, 30 pips, because you could still make profit within that little movement within the zone. So if that happens, what I do is I just set a horizontal line or horizontal ray right there, just so I know, the area where the rejection might happen. And that's exactly what happened right here. Price came up, rejected off that point. Got this right there. And it's simple, guys. If you guys do this at the beginning of every week, you guys will have a huge upper hand when trading during that week, because you know exactly where price is going to be rejecting from. Like, a lot of people take entries and they wonder why price reversed on them. If you took time out to draw these zones, you could see exactly, why price was rejecting at that specific point. So I'll turn off the SRs, and you can see right here, it's beautiful. Look at that, perfectly lined up. Price comes up and it literally rejects off the zones back and back and back. So right here, you can see it's at a strong support zone, right? And that's why I still think this is a good trade, because when the market reopens in about a minute, it could shoot right up. Who knows? So there's odd USD for you guys. The lower rejection point is going to be 0.7275. The upper point right here is going to be 0.7309. So those are the two K2SR zones that are closest to current price. Move on to the next one. All right, CAD CHF. Delete the zone, start from scratch, K2SR. Draw the zone right here. This is kind of close, so I can connect these two. It's only about 5 pips. Connected. Use right here, connected. And this is what I meant about the pairs that either move really slow or too volatile, where they keep bouncing between specific points. And these are usually pairs that you kind of want to avoid because they're so erratic that they can go back and forth so quickly, where you might get caught in some bad trades. So there we go. We take off the K2SR, and you know, it still lines up pretty nice. Even though this is a super erratic pair, it still lines up pretty all right. So right here, looking at the current price is within this zone right here. So the upper zone level is going to be 0.69006, and the lower point right here is going to be 0.6885 or 86. Sorry about that, guys. Yeah, it's a tight little area right here, but you know, once price breaks above it or breaks below it, it'll probably test this next zone. So if you want to go even further, the next lower zone is going to be 0.6878, and the upper zone is going to be 0.6918. So let's move on to the next pair. KJPY, do the same exact thing. Delete my zones. Turn on the K2SR version 2. Zoom out. There we go. Let's line these up. Yeah, this is one that's super erratic because it looks like there is a ton of zones that are kind of spaced out. I think the JPY was moving a little crazy last week too. Just kind of jumping around. All right, so cool. So let's see, how far is this right here? It's not, it's fine. So I'm gonna take off the K2SRs, zoom out of here. There you go, perfectly marked zones on the chart for you. So the closest upper zone right here is gonna be 80.59. And the lower zone right here is going to be 80.43. I'm basically just rounding it up just to give you guys some cushion so that you guys don't take, you know, crazy risky trades. So those are the closest zones where price currently is. The next zone up here is going to be 80.90, and the lower zone down here is going to be 80.15. All right, market just opened, so we're going to see some movement. Well, I'm going to keep going through and marking up every chart. All right, again, right here for CHF JPY, zoom out so I get the full screen. K2SR version 2. There we go. So to line this up right here. Line this up over here. Another one right there. See how far this point is from this. Yeah, we can connect these two. It's only about 20 pips. Generally, I like 20 pips for my cushion because that'll cover spread sometimes. Like I know spread's crazy right now because the market just opened, so 24 pips. So the thing is, if you're trying to trade where there's not more than 20 pips, you're gonna get screwed because you're gonna go in with a 24 pip loss. So you got to get 24 pips on top of whatever profit you're trying to make. So you guys got to take that into consideration. A lot of people forget about the spread, and that's why I like to keep at least, you know, bare minimum 20 pips in between each zone. So looking at the zone right here, we have everything lined up. Delete the K2SR, zoom it out. You can see right there, it's perfectly lined up. So the closest upper zone to where price currently is 116.79, or let's bump that up, 116.80. And then the lower zone is going to be 116.53. If you want to go farther up, the upper zone right here is going to be 117.22 or 23. We'll round that up. and the lower zone down here is going to be 115.90. So it just really depends on where you're going to be marking that up from. Move on to the next pair. Euro Auto over here. And this is exactly what I went over this during the webinar, I think a couple weeks ago on the first, and I told you guys it was probably going to go sideways. That's exactly what happened here. So we'll have to wait until, you know, it breaks out. But let's go back and draw these zones. So zoom out of here. K2SR version 2. And yeah, Euro Odd is one of those pairs that just moves super crazy. It just moves way fast. Basically anything paired with the odd pairs or the NZD pairs, they just move a little crazy. So they're very risky to trade, but they're very profitable if you do it properly. So I'm just going to draw that zone there. I think we took some sells last week too on EA, made some profit off that. See how far is this moving down here? 50 pips. So this is way too far. I wouldn't want to create a zone right here because I don't want to prevent myself from entering any trades within that point. I mean, same situation right here. You can see the zone's freaking huge. So the thing is, you know, at this point, you might want to just, instead of having these zones right here, you can just have just lines so that you can see where the rejection points are, because this area is so huge that you can still trade within it. Like you can literally trade within this zone right here. But you know, just for demonstrational purposes and just for you guys, I'm just gonna create the zone right there. But when I do my actual trading, I'm gonna disregard this zone and I'm gonna trade within the zone if I see any entries there, because I don't want to miss out on any. That's a huge move right there to be missing out on. You know, 50 pips or so, you can still scalp within there. All right, so right here, take off the K2SRs. And the, okay, so it's within the zone right here. Just like I mentioned earlier, it's way too big. So you can still trade within it. The upper zone is going to be 1.6327. And the lower zone right here is going to be 1.6254. So you can see right here, it's rejecting off the zone. You can probably shoot up right here and then pretty much bounce within the zone until it breaks above or below it. All right, so the next pair, guys, Euro CAD. I think this one is so messy. I didn't even draw the zones on this one. So let's do it for you guys here. Turn on the K2SR. I mean, it's not horrible, but it is kind of messy. You can see that the zones are too close, but they do line up perfectly. You can see price rejects off this zone, comes up, rejects, literally bounces from zone to zone. But the problem with this is if you start to draw your own zones over it, it starts to look a little messy. So it's kind of hard to really eyeball exactly where you want to place your zone. So this is okay here. Yeah, generally, if there's too many zones here, you might want to just create each respective zone, but you can see it's kind of hard to trade. So like generally, like I mentioned, you know, the algos are going to be trading within these areas. So you probably want to wait for it to break above or below the zones before you take any entries. Because, you know, the last thing you want to do is you want to enter this trade and then you ended up getting screwed because it bounced off this zone and then it bounced off this zone. It's too messy. You know, I'd wait for it to break above this point or, you know, break below this point before you take any entries, because, you know, you don't want to get caught in this and then end up holding this for like a week or weeks on end, and you're going to be trapped in that trade until it moves in your direction. So just looking at price right now, the closest upper zone is going to be 1.5634. The closest lower zone is going to be 1.5580. So that's your CAD right there. Move on to the next one. Euro CHF, same situation. Turn on the K2SR version 2, zoom out. And then we can connect these two right here. All right. A lot of the pairs that are paired with the Swiss franc are kind of messy too, because it's like the JPY. It's a safe haven currency, so you'll see it bounce around a lot. Especially with the US dollar weak, you're going to see a lot of strength, going in that direction. So the Swiss franc's probably going to be strong until election. Same with the JPY pairs. So same with right here. You can see it's stuck within a zone. So I'll probably disregard this closer zone right here, and we'll just look at this upper zone over here. So the closest upper zone is 1.0779, and then the lower zone down here is going to be 1.0753. So those are the two zones right there that you might want to look out for. Yeah, you can see right here, prices, it's literally bouncing between these two zones, but then it's consolidating down the middle right here. So the next pair, EG, delete that, turn on the K²SR version 2, zoom out. And it doesn't look like there's any clear zone that's coming up soon. So when this happens, which happens, every so often, especially if price shoots way too high, like right here, it shot up way too high to a point where price hasn't tested in a long time. You can see right here, just looking at the 4-hour chart, there's no zones here because price hasn't tested here since March. It's a long time ago. So in this situation right here, I'm just going to draw these lower zones for you guys so you guys can see where the lower areas are. And then after that, I'll show you how we get the next zone, like the upper zone, because it's so far, how we identify that. Because this happens sometimes, if there's something going on in the market, pushes price like crazy. I think what happened here was last week, there was really bad Brexit news. So that's why the GBP is so weak. I'm sure you guys are aware, if price is going up, that means that the first pair or the first currency is gaining strength. Same situation if it's going down. That means the second currency is gaining in strength versus the first pair in that asset. So let's just go back and line this up right here, the last zone. So when this happens where you don't have an upper zone that's close, and obviously you want to know where the upper zone is because you don't want to be trading too far up and then it comes like crashing down on you. So when this happens, you go on the higher time frame. So we're currently on the 4-hour. We'll go to the 8-hour. Nothing there, obviously, right? Well, we can draw this right here just so that we have a closer support zone with regard to what we have currently. Okay, right here. So we're on the daily. This is the closest upper zone. So we have that lined up. We'll go back to the 4-hour. And then you can see right here that this is pretty far out. So the closest upper zone is going to be 0.93, okay, 0.9392. And the closest lowest point is going to be 0.9176. I'm just rounding them up so you guys can see. But yeah, price looks like it can probably keep pushing up if the GBP news doesn't get any better. It could probably keep pushing up to this next zone before it comes back down. But who knows? Like, we're not going to know because this is such a big move. If you count these pips right here, let's see. Yeah, that's a lot of pips for EG. EG is a slow moving pair. It doesn't really move that much, but right here is about 130 pips. It's a huge move. So it'll probably drop before then. It might even drop right here, come down and then shoot back up, depending on how the news plays out. But there's a ton of scenarios. When price moves like this, I generally keep away. It's just too risky to trade. You don't want to get into something that you don't know what you're getting into. So let's go to EJ right here. Delete everything again. K²SR is right there. And then we'll draw rectangles. All right, we got this right here. All right, cool. Once we got that, hide the SRs. You guys can see very nice markup right here. So price is currently right here. The closest upper zone is going to be 125.94. The closest lower zone is going to be 125.14. So those are going to be the rejection points. Move on to the next one. Euro NZD, we still have this lined up right here. You can see I have my zones already lined up, but I'm just gonna do it for you guys fresh so you guys can see what we're looking at for the week. So I'll delete this, that. Ton of zones here. All right, cool. Zoom out of here. Turn on the K2SRs. All right, nice. So, like I mentioned earlier, the pairs that are paired with AUD and NZD, they're generally kind of messy. So, don't be surprised when you see zones kind of all over the place for these specific pairs because they just move way too erratic, which could be a good and a bad thing depending on how you trade it. These lower zones are kind of irrelevant, but I'm just going to line them up anyways, just so you guys can see. And they're irrelevant because price isn't near these zones. Like I'm not expecting to trade down here this week, but it's good to know just for reference, if you just want to look back at it. And it's always good. Like, there's no problem with having too much knowledge. Because if you have a lot of knowledge, then you can come up with better trade ideas versus having minimal knowledge. But yeah, there goes the zones for that. Turn off the SRs. Zoom out of here so you guys can see. And you can see the perfectly lined up zones. See, price literally comes and tests these zones perfectly. And these go way far back. Like, look at this zone was created for right now, currently, and the zone was actually created way back in April. So you can see that price and history always repeats itself. So right here, we're still in a buy position. I got out here at TP2 for 50 pips, I'm assuming. But it looks like it's rejecting off this K2SR, so it can actually probably shoot back up. So I'll go on to the next one, the K2 Euro USD. We're like halfway done, guys. So if you guys are getting tired, I am too. So I just got off another mentoring call before this. But I'm here to give you guys value pretty much all day, every day. And this is going to help me anyways, because I need to analyze the charts for the next week, for the following week as well. So the market just opened at 2 p.m. my time. It's about 17 minutes ago. But I'm gonna let the market stabilize a little bit before I take any entries. So maybe in the next 4 hours, I'll start taking entries. But it's good to know where these rejection points are. So if I do see an entry, I'll know whether I'm gonna take it or not because I have these lined up already. And thanks for Jerry. Jerry's the one that actually requested this. I know, I probably should have been doing this from the start because I do this anyways. I'm on the chart on Sunday marking this up anyways. I don't go on live to show you guys. But thanks, Jerry, for requesting this because I'll just start doing this every week because I'm on the computer anyways. So if you guys have any questions, I can answer questions while I'm doing this. All right, so here's your USD. Take off the SR. And there you go, everything's lined up perfectly. You can see the consolidation zone right here. You can see the rejection points. So for your USD, the closest upper zone is going to be 1.1859, and the lower zone is going to be 1.1817. So there's going to be the rejection points for your USD. Next pair, GA. I think this is one we took last week. We hit that for 100 pips right there. Real nice. Delete that. Turn on the K2SRs. And the same situation will happen with EG. Price is way too low, so we're just going to mark these up here, and then I'll go in the higher time frame to get that lower zone. Looks like these can connect right here. NZD CHF. Let's take a look at that in a little bit. think we might hit TP on that already. That was just a lingering trade from last week. Let's see. Actually, let me pull that up right now. NZD CHF. Oh yeah, we hit TP on that last week, TP2. So I think we actually got out of that trade on the 10th. Yeah, that was like 3 days ago. So yeah, I got a trade in profit last week before the market closed. Thank God, because it looks like price spike. We'll get to that soon. So I'll take a look at that in a little bit. But we'll see what happened there. All right, so we're still finishing up GA over here. Messy chart. All right, let's go back to the higher time frame to get the lower zone. Nothing right there, but I'm going to mark this up because it's a closer upper zone since it's pushed down so far. Nothing here on the daily. All right, the next zone is right here on the weekly. Man, this is so far down. So I'm just going to draw this right here. It looks like it's actually stuck in a zone right now. So this is a super messy pair. Yeah, so it's actually within a zone right now on, let me just turn this off. It's going to look a lot better. Zoom out. So here you can see nicely plotted zones, and price reached this area, which it hasn't tested for weeks. So let me go back to the weekly chart. Let's see when's the last time it tested. Geez, a long time ago. So this didn't test since July 2019. That's more than a year ago. That's crazy. So this is a strong zone right here. You can see that the zone was already, it's already identified it from more than a year ago. So, price is probably going to go, well, there's a lot of news coming up. So there's news tomorrow and on Tuesday. So this could literally go in a lot of different ways, especially with the pound so weak. Like I mentioned earlier, Brexit had bad news. So that's why it dropped so heavily. But we'll see how it plays out this week. It's probably something I'm going to stay away from until I have some better confirmation. But we'll check that out. All right, so GCAD right here. It looks like all the GBP pairs are pretty far off, and that's because of the Brexit news. So I'm just going to speed this up a little bit. And you guys don't have to be spot on with these zones. Like if you guys have the zones lined up, you guys have a general idea where not to trade and where to trade, then it does its job. This isn't going to be your main indicator depending on how you're going to trade. This is just going to tell you where not to trade to minimize your losses and stuff like that. All right, nice. We got that lined up right there. Okay, so the next zone, the upper zone is going to be at 1.6940, and then the lower zone is going to be right here at 1.6862. You can see that nice projection off that zone right there. It's probably going to bounce back up, because the pound is going to have to recover slightly. It's pushed way too far down where it's going to have to at least balance out a bit, possibly. Here we are, the GBP CHF, another messy pair, or another messy GBP pair, to say the least. All right, so we got that right there. Let's see. Got that right there. Actually, this could probably connect because it's a big zone. All right, we'll go lower to the 8-hour. Provides for a lower zone for us to look at. We still need that lower zone to know where not to trade. So it's marked up right here too. So if you guys are just joining us, generally if we don't have a zone on the 4-hour, let's go on the higher time frame. Nothing on the 8-hour. We'll go to the daily. Nothing on the daily. We'll go to the weekly. But we have everything lined up here already, so everything looks good. Here's the zones for GC. The upper zone right here is going to be 1.1687. The lower zone right here is going to be 1.6. 1.1627. And then lower than that, looks like, yeah, if you want to go way down here, this is a huge move though, so I don't think it's going to really push that far down. It's like 400 pips, guys. Like something has to, the pound has to disappear for it to drop that far. But it looks like it's going to correct back up. But if just for reference, you know, the zone down here is 1.1245. You know, if you guys want to take a look at that, but that's way too far down. I don't think it's going to drop that far. So GJ, we still have this position open from last week. Let me just draw these zones right here, delete these zones, clean it up for you guys. This is irrelevant up here. This is so high. All right, perfect. So I'll zoom out of here, draw my zones. Delete this. This zone's probably here from like weeks ago. All right, cool. So let's see. We got this right here. We got this right here. All right, cool. So there's the zones for GJ right there, guys. So looking at GJ over here, we still have our sell position from last week, but it looks good. So it's right between these two zones. So, you know, obviously what's going to happen here is probably going to come down further and test the zone before rejecting. So like I got out of this trade at TP2, I think, right here for 50 pips, I believe. And that's because it's getting close to the zone. So, you know, once price reaches the zone, it could probably retrace up, but you know, who really knows what's going to happen? It's better to protect your position than to take that risk. But the upper zone here is going to be 136.52. And the lower zone is going to be 135.50. So those are the two zones right there that you guys can look out for. And then there's lower zones down here as well. Go to GN. Redraw these zones for you guys. Let me turn on the K2SRs. All right, let's get it. So let's see right here. Got this upper zone. This lower zone. This upper zone. This lower zone. This one right here. This one right here. And this one right there. All right, cool. So we got all the zones lined up. I'm going to hide the K2SRs. And there you go. You have everything lined up perfectly. You can see price. You can see, look, if you look back at the data like to May, this same exact price point is tested again right here. You can see history repeats itself months later. So in May, price was, you know, having issue breaking these points. And these zones were actually created way in May. Once price reached that area again recently, you can see the same exact price points are tested again. Same situation, you know, history just repeats itself right here too. Price rejected off this lower zone on September 11. It also tested there on June 20th. So you can see that the data goes back pretty far. But looking at GN right here, the upper zone is going to be at 1.9289. The lower zone is going to be at 1.9130. Cam said, so you're not looking for entries within the red zone? Sorry, I missed a fair bit of this video. Hey, Cam, so me personally, I don't like to trade within these zones right here because these zones are areas for manipulation. Because the thing is, a lot of people are looking at these same zones right here, and you can see that there's a lot of areas where, you know, most of the time there's like bank algorithms that have specific thresholds. So basically when price reaches these areas, the bank algorithms will put orders in to push price in a certain direction. So you can see right here, price generally goes from zone to zone. So it goes up, rejects off this zone, rejects off this zone, and it pretty much just goes from zone to zone. So the problem with trading within these zones is that, say you're right here, right? And you're just, say you're, you know, using for an example, if you're trading basic price action, right? If you see this right here, you're going to identify this as a double top, right? So what happens here? A lot of people enter their sells right here because they want to, they consider this a double top, and then they get stopped out. So the problem with entering trades right here, when you get like near a zone, is that you're really entering this with a 50% chance, because once price reaches this zone, price can either reject off it or it can break through it and continue upwards. So it just really depends on, you know, what strategy you're applying. Me personally, I don't like to trade within these zones. I mean, I don't like within the actual zoned area, because I don't want to get caught in this trade. I don't want a 50% chance. I want like a 70% chance or 80% chance that I'm gonna, you know, I'm gonna win this trade. So basically, the way I trade is I trade in the white areas. I don't trade within the zones. I trade where there's open space right here. So if I turn on the K2 momentum indicator, you can see right here, if you trade within these zones, well, not within the zones, but within the, you know, outside of the zones, you could have a pretty good percentage of actually catching these trades. Like right here, you can see, you know, price, we got a buy signal. So I wouldn't take a buy here because it reached the zone, reject right off it. We got a sell signal right here, but let's see how many pips until the next zone. There's like 30 pips right there. So you can take a scalp right here for like 20 pips or something. And then you could like take a little scalp right there for that little win. Same situation right here. You know, price, if you get a buy signal, it breaks the zone. Generally goes from zone to zone. This next zone up here, you could have taken a buy right there. And then that would have hit eventually. But the problem is if you're trading within a zone, so let me just go to a zoned area. So if you're trading within a zone, like somewhere right here, you know, price can go either way. It can either go up or it can go down. And the thing is, like, you really don't want to get in the ways of the bank algorithms, because the bank algorithms are either going to push you out or they're going to go in your direction. And it's just too risky because, you know, obviously you want to go where price isn't getting manipulated. So you can see right here, price, once it reaches the zone, it usually goes sideways. It'll consolidate until it breaks out of the zone and continues in that direction. But if you just wait for it to break outside the zone and you trade in the free space, like where there's no zones, you can literally just ride this from zone to zone. So if you took this trade right here, could have rode it to this zone over here. And then you could have rode it from, you know, this zone right here to this zone. You're pretty much just riding the waves from zone to zone, because you can see right here, price literally just goes from zone to zone. And then just looking back at, you know, data far back, you can go back to, like I just mentioned earlier, these zones get retested so far in the past where you could literally see where price is going to reject from. So price tested the zone back on June 20th. It tested it again right here. It's a strong zone. So June 20th up until July 20th. Can literally reject right off here. And there's just a ton of ways to apply this. But yeah, me personally, I don't like to trade within the zones because I don't want to get caught in any reversals, because like I mentioned earlier, so like right here, if you were to trade off this zone, you know, there was no guarantee that I was going to shoot up. It could have came back down, or it could have continued up like it did right there. Same situation with right here. You know, if you're trading within a zone right here, price could either come back up to test this zone, or it could break below it. So what I personally like to do is I like to trade within the open areas, like this area right here. If we got a sell signal right here, or we did get a sell signal, but it broke the zone right here, then you could take a sell position, write it down for like 200 pips. Same situation right here. Price broke the zone, ride that free wave down there. All right, so that's GN. Let's go on to the next pair. Almost done, guys. I know you guys, some of you guys have been here for, like since the beginning. I know this is supposed to be short, but you know, I want to help you guys as much as possible. So right here, GU. Let's take this off, turn off the momentum indicator, turn on the SRs. And here we go, guys. So right here, that zone right there, that zone over there, we hit full TP. I don't know why I have this alert still on. It's a stop loss alert, but looks like we already hit full TP. So I'm going to delete that. All right, so we got this zone right here. This zone right there, and then another one down here. All right, guys, so the closest upper zone right here is going to be at 1.2983. And then the lower zone over here is going to be at 1.2670. And taking out K2SRs, you can see that these zones are lined up perfectly. You can see that it's coming back down right here to test this zone that it created back in July. So this is a strong zone. You can see right here, it's tested the zone right here in July, all the way up until June. How far back does it go? It goes all the way back to April. So you can see that these are very strong zones. You can literally just go back and see where it tested. Even these zones up here, you can see we just lined up these zones currently to where price currently is. But you can see that this area was tested and it did the same exact thing in February. So if you guys have, these zones lined up, you can see how strong they are and what the odds are that's probably going to reject off it once it reaches it at that point. So there's GU. Move over to NZD-CAD. Sure, no problem, Cams. Let's see, right here, turn on the SRs, and then let's line these up. So it's easy, guys. Like, I'm doing this slow because I'm showing you guys, like, I'm breaking it down, how I do everything. But once you guys have this down, you literally just need to open up every chart, and I can just do it real quick. I just line the stuff up like that. And then you guys can see exactly, what's what. And it's really not that difficult. Because this is going to give you the framework and your bias for how you're going to be trading for the week. Because once you have this lined up, it's like, okay, now you know where to trade, where not to trade. If the price is too close to the zones, then you can just avoid trading for that, like that specific pair for that week. And then you just wait for it to open in an open area so that you have a better edge when trading. This is pretty much your edge, guys. Like, if you guys are trying to, like, you guys are wondering, like, what's your edge in the market? Your edge is understanding where not to trade, because that's how a lot of traders get trapped. Banks like to trap traders because a lot of traders don't know what they're doing. But if you have this edge where you know where the banks are trading, because obviously, it's clear. These movements in price, these aren't made by you. They're not made by you or me. They're not made by retail traders. We don't have enough money to push a currency in a certain direction. These are the banks here. So whenever price rejects off these points, they're rejections because banks are putting in orders because they don't want price to break these specific zones. That's the difference with the stock market. With stock markets, people can pump and dump that. They can tell a whole bunch of people to put in orders and push price. The difference with currencies is, you can't compete with the banks. So it's best for you to stay out of their way and to just trade where they're not trading. Like in these zones right here, where they let price pretty much free flow, you just make your money right there. And then once it reaches these zones, it's like, all right, let me stay away from these pairs because I'm not trying to get screwed by the banks. Because it can literally go one of two ways. There's a ton of different ways that price can go. But, you just don't want to get in the ways of the bank, because if you're not trading in their direction, you're going to get screwed. And it's better to be a safer trader so you can last in this game long term versus being a quick overnight money trader, because that's how a lot of people are. They want to make quick profits really quickly, but they lose it twice as fast. So that's the whole point in this. But looking at NZD-CAD over here, there's way too many zones. So this is probably a pair that I don't want to trade right now. The upper zone right here is going to be 0.8796. I'm going to round that up. And the lower zone right here is going to be 0.8731 or 30. You can just round that up. And yeah, so this area right here, you don't want to trade this because since it's within the zone, it's probably going to keep bouncing back and forth. And the last thing you want to do is be caught in this trade and it's bouncing back and forth all week. And then say if you're in a buy right here, price ends up shooting down and you get stopped out. Vice versa, if you're in a sell, price is bouncing and it shoots right up, you're going to get screwed. So it's better for you to, be safe. and just avoid the trades that are the assets that are risky like this. But there's NZD CAD for you guys. Man, I don't know what happened to NZD CHF. Look at this crazy pair, this spike right here, guys, on market open. I don't know if you guys are seeing what I'm seeing, but this is crazy. Wow, 300 pips for whoever. Oh, so that's what happened. That's why it got. This is why I tell people not to hold trades over the weekend. Because if you hold trades over the weekend, look at this spike, guys. Everyone who was holding this would have gone stopped out. Thank God we got out of this trade in profit already. But it looks like it spiked and then it ended up coming back down. But thankfully we got out of this trade over here with, let's see. Yeah, we got out for 25 pips yesterday, on Friday, I think. Thankfully, I'm hoping none of you guys were holding that trade because this is like insane. I've never seen this in a long time. Wow, 360 pips, guys. That's crazy. And then it came back down. So let's see. Let's draw these zones here just so you guys can see. All right, you got this lower zone right here. Sure, no problem, Ruby. I just saw Ruby's message in the YouTube chat. Yeah, Ruby's new with us, so welcome, Ruby. Welcome to K2. We have this every week, so I go live every Tuesday and Thursday, and then now I'm going to start doing it at the beginning of the week so I can give you guys this weekly breakdown of these zones so that you guys can have an upper hand and an edge in the market when you guys are trading. You guys don't have to be trading K2. This is just going to give you guys understanding where not to trade and where to trade. So you can see right here, we have these zones light up for today on the 14th, but you can see that these zones were actually created way back in May. So, history repeats itself. And that's what I mean about the bank algorithms, because these bank algorithms have been trading these zones for, months, if not years on end. So the thing is, if you have these lined up from the past, it gives you a huge upper hand in the market because you'll know where not to trade. That's a problem with a lot of people when they trade, or when they try to draw their own zones. They don't go as far back as the K2SR indicator. The K2SR indicator goes back as far as you want it to. So you can change the data here, how many candles you want to go back. 100 candles for me because I only like to trade intraday. But if you want to go farther back, you can change that to 1,000 or 500 or, whatever you guys want to do. But it doesn't really matter because even if you line it up right here where it's 100 candles, if you go far back in data, you can see that we have that, like this data lines up, this data right here lines all the way up with August of 2019, guys. So this is a huge upper hand and edge that you guys have in the market if you guys have these zones, because you know exactly where price is going to reject from. Because the thing is, so like look over here, the bank algorithms, they probably have this data from like way last year in August. They still have that data until now. So their AI is pretty much rejecting off these specific points. When price reaches this point, the banks are like, nope, we're going to push price down because that's historical data all the way from 2019. Like literally, this helps you guys trade smart every single time because you're going off historical data. But okay, so right here for NZD CHF, the closest upper zone is going to be 0.6086, and the lower zone is going to be 0.6033. And that's just going to be the zones for this specific pair. Next pair is NZD-JPY. Same situation over here. Let's delete everything, go from scratch, K2SR version 2. And I'll draw these zones right here. There we go. I'll just connect these. once we start getting into these NZD pairs, it's better to connect the bigger zones because these pairs just move a little faster than others and crazier as well. So, all right, let's hide that stuff right there. All right, cool. So you guys can see right here, same situation. You know, we have these zones lined up. And if I go far back, you can see that these zones have actually been created way far back. You know, I'm just trying to show you guys that like the power of these zones. Like a lot of people are like, okay, these zones are just temporary. No, they're not temporary, bro. Like this zone is created right now where we currently are because my information, so I'm only going back data 100 candles back. So 104-hour candles. So it only goes back to here, right? But the thing with the K2SR indicator is that it ties in data from way far back. So you can see this price zone right here has been tested since May 2019, again in December 2019, February 2020, January 2019. Like this is a huge edge that you guys can use because obviously, you know, if it's been tested so many times in the past, odds are it's going to get tested again in present data. So there goes that right there. For NZD-JPY, the closest upper zone is going to be 70.89. The lower zone is going to be 70.53. And those are just going to be the closest zones for, you know, where price is. And this is the 4-hour candle. So if you guys are trading on the shorter time frames, you guys will see exactly, you know, how it moves on there too. So if I go on the 30-minute, it still lines up perfectly. I just find the 4-hour to be perfect for intraday trading, which is how I trade. All right, NZD USD, same thing here. Turn on the SRs, zoom out of this real quick, and then draw our zones. All right, cool. We will delete our SRs. And then, you know, same situation. I could go back on any single pair. Like literally, it's been tested in December 2019, same exact where we are right now. So in December of last year into, you know, new year, it was consolidating within this point. Same situation right here. It was consolidating again in July. Same situation with September. You know, history repeats itself. If you guys are trading currencies, this is a huge upper hand that you guys can use to identify, you know, where to trade and where not to trade. So the closest zone for NU is going to be 0.6668, and then the lower point is going to be 0.6651 for NZD USD. All right, guys, we have a few more pairs. We have a USD CAD right here. Draw the SRs. All right, cool. We got this lined up. All right, so we'll hide the SRs for UCAD. This is a slow moving pair, but the closest upper zone is going to be 1.3193, and then the lower point is going to be 1.3162. That's for UCAD right there. USD CHF, same thing right here. Let me delete everything. Turn on the SRs, zoom out, and let's line these up. All right, perfect. I got these lined up right here. I'm gonna hide the SR version 2. All right, so basically right here, price is within these two zones right here. So it's probably gonna consolidate before it breaks out above or below. The current upper zone is gonna be at 0.9099. And then the lower point is gonna be 0.9083. So once it breaks above that point, it can probably break above or it can break below. So it just really depends once it breaks that point, because there's enough space within these zones for price to move. So price can move from this zone to lower. Same with right here. It can move from this zone to the upper zone. But we'll probably have to give it some time. But yeah, just going back, I'll show you guys again. You can see that these zones are pretty accurate. See, like this area hasn't been tested in a long time. It hasn't been tested since February 2018, guys. So like, you know, if you have these zones on the chart, like literally, if I wish I caught this right here. So if you caught this trade right here on March 20th with this point at February 18th, 2018, you literally could have rode this all the way up because it was this nice rejection for like 700 pips. That's crazy. But yeah, price is in a new area right now. So it doesn't look like it's tested this point like ever really. It looks like the Swiss franc super strong since the US dollar is super weak. But yeah, so that's USD CHF. And then we got one more pair, guys. We have a UJ right here. So let me just delete everything again, open the SRs, and I'll go over a couple indices too. I'll go over US 30 and NASDAQ and S&P, just the big ones, so that you guys have a good understanding for those two, and gold as well. So those are the last ones, and then after that, we'll call it a week, and then we'll start trading in a few hours once the market has stabilized. But like right now, we're just preparing. Like this is all we're doing right now. We're just preparing for the week to come, so that once we actually trade, once the market reopens, you'll know exactly where and where not to trade. So let's make a big zone right here, and then one right here. Actually, this is a lot of zones, but they're all kind of connected. Yeah, there's not enough space in between, so I'll leave those as it is. Sometimes it's better to have a bigger zone than a smaller zone because you don't want to get caught in any random reversals and stuff. So delete that. And you can see right here, nice zones. See the same exact, see this mess right here? Let me just take this off. You guys can see this huge mess right here, right? This mess was the same mess that was going on in August 2019 last year. And then again right here on March 2018. You can see that this is a strong point where a lot of stuff is going on. So this might be a good point for you to be careful, because you can see right here, and right here. Strong zoned area. So looking at UJ, the closest upper zone is going to be 106.57, and the closest lower point, I'm going to ignore this one because it's too close. Closest lower point is going to be 105.90, just for you guys' reference. All right, so that's it for the normal FX pairs you trade. I'll look at gold real quick just so you guys can have that locked up as well. Let's turn on the SRs, zone out, and then we'll go from top to bottom. Yeah, so this is going to be a tricky pair because it's within these two zones right now for gold, and gold's just moving pretty crazy. I know you guys are familiar with gold. There's a lot of gold heads out there that love trading this, but you can see price broke a new high right here, and then it's been literally bouncing around within that point. So right here, price is within these two zones, and the zones are just the problem is, even if it breaks below the zone, it's probably just going to keep consolidating within this area. You can see price literally has been consolidating within this bigger zone, and then it got tighter into this smaller zone right here. So literally it's probably going to keep consolidating within this zone until it breaks outside of it. So until it breaks above here or below here, it's probably going to just keep consolidating within this area, which is risky because you don't have a clear direction as to where price is going to be going, especially with elections coming up and with all the the US news and COVID news. It's going to affect gold a lot. So right here, the closest upper zone is going to be at 199. Okay, so 1977.03, and then down here for 1911.70. And that's just, you know, a big overview for this specific pair. Let's move on to NASDAQ first. So I was going over the scalping strategy with Chabot earlier, but let's draw out these zones real quick. Oh, wrong indicator. All right, cool. So let's draw some bigger zones for NASDAQ and the other indices, because indices move a little crazy. They're a lot different than Forex, especially during this time, during election year and COVID. There's a lot of stuff that's going on that's really affecting the indices market. Actually, I can't even draw zones on this, guys, because you can see here that prices move so erratically that I'll just connect these zones right here to make things easier. Or I mean, it's fine. We could just leave it like that, actually. But yeah, NASDAQ is super crazy right now. I mean, this is something that I would probably just scalp. I probably wouldn't really swing trade it because it's just too risky. You know, last thing you want to do is hold on to this trade and it's like going opposite. Like right here, I know a lot of people are trying to buy and it dropped like hell. It was crazy how far it dropped. But yeah, so you can see right here, it's rejected off this specific point, same exact price point on the 8th, and then again on the 11th. So the thing with NASDAQ is we really won't know how it's going to be moving until we actually know. Because when the market opens tomorrow, you know, the New York Stock Exchange, which is, you know, where this index falls under, we can see a huge either correction upwards or a continued drop. So me personally, I wouldn't trade this today. I would wait for some sort of confirmation as to the direction of price. But you can see right here, if it drops even further, the next zone is going to be right here, which is going to be 108.54. That'd be this point. And then the next lower zone would be 107.74. And then, you know, opposite of that, the above point is going to be 112.92. So, you know, literally this could literally go either direction. So this is very risky because it could come down or it could go up. So I'd wait for market to reopen on Monday before you decide, you know, which direction you're going to trade in. Because I know we took a chance on this last week and we got screwed. Like we took a buy and it literally dropped. So I'm like, crap, there's no point in risking taking these like NASDAQ trades until we have some extra confirmation as to the direction of price for, it's not even gonna move for that week. It'll probably be for like a few couple days before something, the next crazy thing happens in the world that causes, you know, the indices to push. So same situation right here. We draw these same zones. All right. All right, cool. So looks like right here, US 30, same situation like with NASDAQ, it dropped like heavily. And then it's like, it's either going to bounce up here or if it breaks below this zone, it could keep falling. So this is also a very risky trade. Let me go back. I'm going to try to see if there's any, so let me see if there's any, I want to see what like the last time this was tested because it's like super overextended. So the last time it was stuck in this area where it's bouncing around was, so rejected off here on the 26th of this year, again on June 2020, and then literally throughout the year. But the farthest back that it actually tested this area was December 3rd, 2019. So it could literally go two of either ways. It could either shoot up or it can break down and drop like it did back in March. But I mean, you know, we really won't know. Depends on what Trump says or like whoever else. But yeah, I mean, that's about it, guys. For actually, let's go over S&P real quick, because I know some of you guys trade S&P. So one other zone over here. Just delete this stuff. So rewind this right here. Try zones. All right, cool. So I got these zones right here. Take off the SR. And then there we go. So the closest zone, it's the same situation for all the indices. I don't recommend anyone trade them until, you know, you have better confirmation as to where price is going to go probably tomorrow. Because the thing is, last thing you want to do is predict a correction here, but it ends up dropping further. I mean, it doesn't mean that, because generally the indices do move up, but I mean, I don't want to take the risk where it's like you take a buy because you're going off a whim, off like your gut that you think price is going to go up, and then it ends up tricking you and dropping further. But the closest upper zone is going to be right here at 33.95, and then the closest lower zone right here, I'm just going to give some cushion because there's a lot of movement that can happen here, is going to be at 32.76. So there goes, guys. So those are our markups for, you know, pretty much every pair. This is going to be live. I mean, it's going to be replayed on YouTube. So if you guys want to go back and look at every pair that I looked at today, go ahead and go back and take a look. Otherwise, you know, I'm available for questions. If you guys have any questions, feel free to ask me on Telegram. And then I'll probably look for trades in a few hours once the market is stabilized completely. But yeah, guys, thanks for showing up to, you know, the weekly chart analysis. I'm going to try to do this every week now because I do anyways on my own time. So, you know, it doesn't hurt for me to share with you guys my analysis for the week with regard to the zones and, you know, the direction we're trading in. But yeah, guys, so I'll catch you guys later. I'll see you guys in the chat, and then we'll start looking for trades in a few hours, guys. All right, catch you guys in a little bit.